How's it going, everyone? Happy Thanksgiving to everyone. Obviously, this will be posted on Friday right after, but just to prove how thankful I am to you, I want to give you a hot tip here, and we're going to talk about Walmart stock today and why I believe this stock is still a buy at these levels, right? It's a hot stock, and we're talking about a consistently, relatively historically boring stock. I mean, you can't deny it. Typically pretty boring. This year, though, has seen a 27% growth. But if you look historically, I mean, it doesn't grow at these rates for the most part, but it has been kind of going off as of late. And I still think at these levels, this stock is worth buying. People may think it's crazy, but I have a lot of reasons for it, and we're going to go into it today. I did want to preface with one of the main reasons, which I think a lot of people don't necessarily consider as it's a very stable and consistent stock. I did want to really point that out because if we look at a max timeline for this, tell me in a normal chart, anywhere else, in 2008, what do you see? Tell me when the financial crisis hits. Tell me that kind of dip that you see, right? I don't see it here. I'm just going to be frankly honest with you. Walmart is pretty well a very much recession-proof company. You don't see a dot-com bubble. You don't see a 2008 financial crisis dip. You don't see that here. This is a stock that continuously performs well through recession, through really any market environment. It consistently does it. It always does it. So regardless of what you're facing, you know you're with a consistent stock with Walmart that's probably not going to go down. And that's what I really, really do like about it. But I do think there's a lot of growth factors people aren't necessarily considering right now that should make this stock be worth a lot more. And with that, in terms of consistency, you got to mention the dividend. The company, since inception of the dividend, has been raising it every single year. Right now, yields around 1.4. Nothing crazy because the price is relatively high for the stock, but the yield's good. I mean, it's a really good yield for a company that's still bringing you good capital appreciation. Capital appreciation's been amazing on this company. Yet they're still paying out a dividend, which is really good to see out of a company. I really like that. And when we're talking about just the basis of the stock, and I always do this, you bring in the numbers and you look at, obviously we'll bring up Yahoo Finance here. Let's take a look. Trailing PE on this company right now, a PE ratio of 21.8. Forward PE of 26.3. I don't think it would be fair of me to not say that is an absurd valuation and not in the expensive category. Historically, this company does trade around 20. You know, it's typically where Walmart is fair value. Typically, that's where the market should be in terms of fair value, in terms of P ratios for the most part. But right now, this is a market trading where most companies, really the S&P 500, is over a 30 PE ratio. Yet Walmart is sitting here below 22. Even a forward PE of only 26. I think that's cheap. Price to sales of 0.79. I think this valuation is cheap for the company because they have actually good growth right now. And we're going to look, obviously, historically at the financials in terms of revenue. So this was a company that was seeing growth, around 1 to 2, maybe 3%. It's now seen growth over 5% this year. And again, a lot of this is a bump because of people spending a lot more during pandemic. And other companies shut down, so they're benefiting. But I don't think this is a trend that's necessarily going to end in the short term. I think Walmart's eating a lot of people's lunch right now, and people are going to continue this frantic pandemic spending, and they're going to post the biggest quarter four I think you've ever seen out of a retailer, no doubt. It's going to be an incredible quarter four, and you need to account for that. Trailing 12-month, $550 billion nearly in terms of revenue, compared to $523 of a year ago. To see what's going to be, after this quarter, really close to a $30 billion, probably will be over a $30 billion increase year over year, that's an incredible number when you're talking about values at this rate and such a long-standing company like Walmart. To see a retailer grow like that is something really I don't think you could imagine. I mean, it is incredible growth, and you wouldn't necessarily expect it. Obviously, you got to disclose Walmart's my biggest position if you didn't know. So there's reasons for it. There's reasons for me mentioning this. I've got 55 shares, closer to 56 now after the most recent purchase. So again, I've got skin in the game here, so that's why I'm selling this thing up a little bit. But I think there's a lot of value regardless, and that's why I'm personally invested so high in this. So I want to bring up where the growth factors come in for this and why I think there's long-term growth here, because I think a lot of people might consider, well, once we return back to normalcy, maybe they won't see the amount of benefit they're seeing right now. Well, let's look at the most recent earnings. And one thing I really want to point out is overall, first off, comp sales rising 6.4%, but e-commerce soaring 79%. It was up 100% last quarter. Now, I wanted to mention this. 6.4% comp in the U.S., that is off of a transaction decrease of over 10%. They decreased transactions over 10%, yet saw a comp sales increase of 6.4%. So there's less people in store, less purchases being made in general, but they're much larger. So I think those larger purchases continue, and once we're in an environment where people feel more comfortable and safe to go outside and shop, they'll just continue to rack up transactions as well as larger transactions. That's my opinion on the matter. And the e-commerce is something that, frankly, they need to get ahead on to compete with really the giants, because e-commerce is a big, big portion for them. E-commerce is the way of the future, and the fact that they can see massive growth means they're doing something right. So that's something they need to focus on, and e-commerce, it's worth a lot of money. My really biggest point here that I want to bring up for a thesis on buying this, it's going to be the most recently introduced Walmart Plus program. And we turn to this now. Walmart Plus, free unlimited delivery, fuel pricing, and more. Only $12.95 a month or $98 per year. So just off the base, I wanted to mention, obviously, Walmart has a lot more in terms of customers than Amazon. I can't deny it. They certainly do. Not all use the .com though, so it's not necessarily fair to get a 100% comparable aspect in that. But without even going into the benefits, we'll go into the benefits in just a little bit. I just wanted to take a brief look at the numbers. So Amazon Prime is boasting around 112 million Prime members as of December of last year, which has probably increased to over 120 million right now. Obviously, this is a new program, so it'll take time to develop. But with Walmart, they have such an outstanding customer base, massive customer base, that I think they'll be able to grow that number a lot quicker than Amazon grew it, right? Because there's a lot of people that already use this website, and now they're going to probably zoom onto this. I give a pretty conservative estimate right here. I think within 2 years, I think they could have 50 million people using Walmart Plus within 2 years. You know, maybe that's aggressive to some people. I think it's a completely fair. Based off that 50 million number, which even if it stayed there, I've done the math for you. Just at the base, $98 a year. If they did that instead of the monthly, which with the monthly is a lot more, by the way, it adds up to over $130 in a year. But we'll just do everyone does the annual $98. That's equivalent to a little bit under $5 billion for the company. $5 billion in annualized revenue they could increase really for nothing. It's pretty much nothing. The only thing that they're taking out, obviously, is shipping cost, which they'll hit a little bit of that, but most of that they just eat anyways. So that's close to $5 billion they could just completely add in terms of revenue there. And why do I think there's going to be 50 million people joining this program? Well, let's talk about the benefits, obviously. Look at this happy. Just happy. They're happy. They're boasting it pays for itself in 2 deliveries. Free deliveries, it's massive. Unlimited free deliveries is really big. You don't have to pay for it. And this is a program where they're going to be boasting, obviously, 1-day shipping here in the future. It's massive. 2-day free shipping is really big. And then once you get to 1 day, I mean, it's only going to get crazier for this. This is going to be a top-tier program. On top of that, you're not paying any higher for anything you got, and you have more benefits, right? So they're not charging you extra to use the service. Besides, obviously, your fee online's not going to be changing what you see normally in store. Same low prices. But some of the really big benefits that I want to point out. Unlimited delivery includes obviously same day, normal prices, 1 hour delivery windows. From groceries to gadgets, they sell it. They give you it all. They'll deliver it all, even groceries, which is a really big thing. Other benefits, pricing on fuel, which is actually really cool for, obviously, benefits on Sam's Club, Walmart, and Murphy stations. Say 5 cents per gallon, which actually is like, it could be a pretty big factor for some people. They will jump on that, no doubt. They'll be happy to be a Walmart Plus member. Free unlimited deliveries. In the middle here, I wanted to show this mobile Scan and Go. Scan and Go is a really interesting app for a lot of reasons. I do think it'll add to quite a bit of theft. I don't think you can deny that for this company that faces a lot of theft as is. But mobile Scan and Go, what this allows you to do, what it allows customers to do, is it's really incredible right now because they don't need to go through the lines at all, not even self-checkout. Mobile Scan and Go lets you take your phone with you through your shopping experience. You scan items on your phone, and then you check out with the card you have saved on there. And then you go right to the exit door, right? Very easy, very simple. It's Scan and Go, right? Super simple process, contactless shopping. You don't have to worry about dealing with anyone or lines. That's a really big factor too. Obviously, Walmart lines, they can get extensive, even at the self-checkouts. But Scan and Go, you've got no lines at all. You are your personal shopper. You shop, and you go straight to the exit. You don't have to worry about waiting in any lines. That's what's incredible about this, right? And I think that's going to draw in a lot of people, especially in the current era. And I don't think it's going to go away. I think we're obviously going to be, at least for another year, concerned about social distance and everything like that, right? Regardless of we get a vaccine or not, I think people are still going to be conscious over that stuff. So I think being able to do contactless shopping is going to be massive. And on top of that, obviously, their online grocery pickup businesses are going crazy. If you wanted to go in store, you'd want to use Scan and Go here. It'd be really good. I don't know why on the far right side they're throwing their Nintendo Switch in with a bunch of fruit and Play-Doh, but who knows? I wouldn't keep my Play-Doh next to my fruit because I might accidentally eat it because I'm a dummy. But I hope you really had a good time with this because that's why I consider Walmart stock a buy. And if you disagree with me, let me know reasons. If you agree with me, appreciate you giving a like and have a good day.